Those days are over. The problem is now inflation, and the problem is that the economy is going to be driven into recession by inflation. A lot of the inflation that we're experiencing now, today, isn't even the inflation that was unleashed during COVID. We're actually experiencing a lot of the price increases that is the result of the money they printed years ago. The money we printed last year, the money we're printing this year, we may be dealing with that inflation in 2023, 2024. Whatever baby steps the Fed makes now to push back against that tide, we're not going to feel that for years. And so interest rates have to keep going up. That is the problem that the stock market hasn't even really begun to grapple with. Even though you're seeing the big decline, particularly in these high-priced momentum stocks. In fact, the average stock now is trading 38% below its 52-week high. That is solidly in bear market territory. Even though the overall averages are not quite there yet, many of the stocks that comprise the averages are solidly in bear markets, but they're going to continue to go down because inflation is going to keep getting worse. The CPI is going to be under intense pressure from rising prices, and as more businesses pass on those higher costs to their customers, it is going to show up. And now the Fed is going to have to constantly talk about more rate hikes, more aggressive rate hikes, and the markets are going to continue to fall until ultimately they fall sufficiently for the Fed to have to call off the hikes and start reversing policy. And in fact, a lot of people already know this. That's one of the reasons that the market hasn't already fallen by more, because a lot of people recognize that a Powell put is out there. Even if the Fed wants to pretend it doesn't exist, everybody knows that there is a point where the Fed is going to cave. They can only talk about hiking rates for so long. And remember, they haven't done anything yet. All they've done is talk. Rates are still at zero. Maybe they've tapered their asset purchase program back a little bit, but they haven't stopped it. They're still purchasing bonds. Bonds are tanking, even though the Federal Reserve is still buying. And I looked at some data today showing that foreigners and foreign central banks, for whatever reason, are still buying treasuries. Despite all that buying, they're still falling. Now, at some point, the foreigners aren't going to buy any more treasuries. They're also not going to buy any more of our overpriced stocks. Again, I talked about this huge rotation going on from U.S. momentum to international value. It happened again today. There was a lot of green on my screen. Even as the Dow was down 550 points, most of my non-gold stocks were up today. All of my oil stocks hit new 52-week highs today, but all the telecom stocks, I talked about those. Those had solid gains, 1, 2, 3% gains today. Look at British American Tobacco. I mentioned that on the podcast, up another 2% today. New 52-week high. It's up better than 15% so far this calendar year. It's up about 30% from its low in November of last year. This is a huge move on no news. So what is driving the price of this stock up? Again, it's investors rotating out of momentum stocks into value. They can't rotate into bonds. Bonds are crashing. They can't rotate into cash because inflation is going to wipe that out. So they're doing the only logical thing, something they should have done years ago, something that I did do years ago. I did it too early, but that's because I understood from the beginning exactly where this journey was going to end up. But people are now figuring it out, and they're getting rid of these stocks, and they are buying international value stocks. It's only a matter of time before they start dumping the dollar too, because if you're going to rotate from U.S. to foreign stocks, you're rotating from the dollar to foreign currencies. And that's going to be an even bigger problem that's going to complicate the inflation problem, because we have been able to survive with these massive trade deficits because foreigners have been willing to take the dollars they earn selling us stuff and buying our stocks. but they're not going to want our stocks anymore. They don't pay good dividends and they're going down. They sure as hell don't want our bonds. I mean, I don't know who bought them recently, but obviously bonds are crashing because people want to get out. And even though the yield on a 10-year treasury is 1.865, right, the highest in 2 years, that's a lousy yield. If inflation is 7%, that's -5. Who wants to lose 5% a year for the next 10 years? If you own treasuries, you want out. The only people that maybe were in these things were momentum traders who thought that overpriced treasuries could go even more overpriced. But what they were doing, they were picking up pennies in front of steamrollers, and now they've been plowed. Nobody is going to make that mistake again. Everybody wants out of U.S. treasuries. And apparently, so does the Federal Reserve, because the Fed is saying, we're not going to buy them anymore. As a matter of fact, we're going to sell them too. So if the Federal Reserve is selling treasuries, and we know the Treasury is selling treasuries, and in fact, government trust funds like the Social Security Trust Fund, it's selling treasuries because all these people who left the workforce, well, they're not paying Social Security taxes anymore. But all the people who retired early, they're collecting. So everybody is a seller of treasuries. There are no buyers. So treasury prices have to keep on falling. But if we can't recycle our trade deficits into our stocks or our bonds, what are foreigners going to do with all the dollars that they earn selling us all the stuff that we buy? Nothing. They're just going to dump them on the foreign exchange markets. We're not going to stop buying their stuff. We need their stuff. We don't make the stuff ourselves, but we print plenty of money and everybody's got that and we all want to buy stuff. But foreigners don't want to take our dollars anymore because they don't want our bonds, they don't want our stocks, and we don't have anything for them to buy because they want the same stuff that we do. They want to buy what they're producing, and that's what they're going to do. And the dollar is going to tank, and that is going to fuel the inflation fire and put even more upward pressure on bonds. This is the perfect storm that I've been talking about. It is a death spiral. Because the more inflation we get, the more people don't want to own bonds. And as higher inflation drives people out of bonds and out of the dollar, that drives inflation even higher. And it's a self-perpetuating death spiral of falling bonds, falling dollar, rising inflation. All of this is going to take a heavy toll on the economy, ultimately on levels of employment. Everything is going to implode. And then what is the Fed going to do? Because everything the Fed has done in the past won't work. Just like all the investments that worked in the last decade when the bubble was inflating are not working now as the air is coming out. None of the Fed's policies that it thought worked in the past are going to work in the future because they only worked when inflation was low. And they can get away with stimulus and quantitative easing and 0% interest rates. And the only reason the government was able to bail out an economy in recession with stimulative fiscal policy, meaning cutting taxes, increasing spending, the only way they were able to get away with that is if the Fed was able to finance it by printing the money. But the only reason the Fed was able to print the money was because the money didn't lose value and bond yields stayed low. Those days are over. The problem is now inflation, and the problem is that the economy is going to be driven into recession by inflation.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.